Hey guys, and welcome back to Inside Investing, and today we're going to be revealing our investing strategy. Let's go. Today we're going to be revealing our investing strategy, and we've been working on this quite a while, and now we want to share it with you as well.
Nice.
Because we think it's essential to have a decent investing strategy for the upcoming year, because 2023 might be a year which you can make or break it. And that all starts with our little 3-step approach. And the first step, buying the good old large ETF funds that cover, let's say, the S&P 500 or the all world ETFs. Low risk, a lot of companies included in those ETFs. And in our case, there are 2 specific ETFs that I'm talking about. That's going to be VWRL and VUSA, which covers the S&P 500. We think that this is going to be the most important step. And as you can see here as well, in the last 5 years, there has been some growth, actually quite a lot of growth, I must say, because actually in January 2018, it was dealing on 43 euros and now it's at 68. And then that's not its all-time high. It's also not the lowest point in which it has been traded for, but we still think that this would be one of our most important steps. So that would be buying more S&P 500 as well as more Vanguard All World UCITS ETF. Because if we look at this performance over the last 5 years, we do as well see it started trading 5 years ago on 72 euros and it's currently being traded at around 94 euros. So that's also a lovely a little bit more than 20 euros that you could have earned per share, of course. As you can see here on the right top corner as well, we currently hold around 6 of these shares. Quickly going back to the S&P 500, we own 8 of these shares. Our second step is going to be buying more specific ETFs. So those are index trackers that cover a specific area, semiconductors or global real estate or digital security. Let's select this one. So this is a specific ETF that only covers digital securities, which we think is something that we for sure want to be investing in as well, which is why we currently hold around 10 of these ETFs. And if you look at the 5-year performance of this one as well, then we can see, I think this hasn't started that long ago. No, you see, so the first point it started trading was around 2018, around 4 euros. A low dipping point there at around 358, and then its highest point was around 7.54. And as you can see here as well, I'm not really sure if this has the best performance, but on the other hand as well, we want to make sure that we are investing in these specific markets as well. And eventually this is of course also a learning channel, and that's why we are so open and transparent to you as well. We want to make sure that we can share this with you. So as you can see, if you started trading this one on the 5th of January 2018, it was 36 euros. It's currently at 35 euros, guys. So this is actually doing worse than it did 5 years ago. So for example, also the semiconductors, quickly having a look at this performance. Yeah, this one started in December 2020. So also here you see it doesn't go back that long, but in December 2020 it was trading at around 16 euros and it's now at around 18 euros. So indeed a little bit of an increase, but not that much of an increase, to be honest. But okay, here in the middle there was quite a big bump. So this would be our second step, specific markets, specific industry in ETFs that we want to invest in. It's going to be less money it's going into in that bucket in the second step. And the third step we're going to reveal in a little bit to you. If you haven't done so already, please give this video a thumbs up and subscribe if you haven't done so yet. Then you will also make sure that you're up to date on how our portfolio is doing and how our strategy is actually turning out, which of course would be hopefully in a good way, I must say. And then the third step that I mentioned was buying separate shares. So as you can see, we currently only hold Coca-Cola, which has actually been at this point in time the only one that's at an unrealized profit of around 19%, which is actually quite a high percentage-wise increase. Looking at its 5-year performance in January 2018, it was at $45. It's currently being traded at $62. So indeed, I must say that's been quite a solid performance in the last 5 years. But this is high risk, guys. In this case, you're buying shares of one specific company. So let's say Coca-Cola, Tesla, Apple, Facebook, whatever. whatever, and you're buying just shares of one company. So if the company doesn't do that well, financially speaking, then that would mean that your whole value of your portfolio is decreasing. In comparison with ETF buckets, there might be a couple thousand of different companies. So in that case, all of those companies need to perform very shitty in order for that share to really go down in value significantly, right? Of course, it could go down a little bit if the market trends is down, but overall, it's less risk. Instead of this, when Coca-Cola gets a bad reputation because they, I don't know, did something bad in a factory or whatever, then the whole value will directly decrease significantly. So that's of course why we're going to be investing less money in this last category. A few companies that we're thinking of buying are, for example, Tesla, Apple. We're looking at that as well. So if you want to see that happening, then of course give this video a thumbs up. If you want to know the total value of our portfolio, then also you should be subscribed, but also have a look at our latest portfolio update, because we do those periodically as well. And in those episodes, you could for sure see what the total value of our portfolio is. And there we also analyze how our performance has been. In the next video, we'll also update you on our future amount of stocks that we're going to be buying. So what is the exact amount of money that we want to invest in this portfolio? I hope to see you there. So guys, leave this video a thumbs up, subscribe if you haven't done so already. I will see you in the next one, guys. Let's go.